Highly volatile. High beta BYND is down 7.09%. This is Tuesday, the 11th of November, 2025. The stock is now in a strong bearish trend, and lower prices are expected to keep printing, going all the way towards the 22nd of December. And the extrapolation of its 21-day moving average is indicating that it's going to remain a resistance for it. So the extrapolation of this 21-day moving average and that of the 3-day moving average have encapsulated an area where it's expected that the stock will trade within or not trade beyond. Okay, as things stand right now, positions open all the way back to 200 days ago are currently out of profit. It has projections of around $3.66 and indeed also $1.67. The probability of it retesting 3.66 is not very high, not high at all, not high at all. It's so minuscule. But I must also tell you that when it printed this $3.62 as of the 21st of October, that probability was also as tiny and minuscule as it is right now. So in the midst of all of these tiny probabilities, high prices still prints regardless. Probability of it retesting 1.39 is very high, quite high, but you may be surprised. It may still not test it at any time soon. Well, extrapolation is saying that it might do that by the 20th of, it may go beyond that. Yeah, it may go beyond that. It may go beyond 1.39 by the 21st of November. Okay, so but there's this debate about there's this bull versus bear case debate. So let's hear more about it concerning BYND.
Beyond Meat's 2026 Survival Bull versus Bear. This video explores the uncertain future of Beyond Meat, NASDQ, BYND, diving deep into the conflicting perspectives surrounding the company's chances of survival in a challenging and rapidly evolving food industry. Viewers will get a balanced, data driven look at the bullish optimism versus the bearish skepticism, with insights into what could truly determine Beyond Meat's fate by 2026. Contrarian slash controversy. Everyone's talking about Beyond Meat's doom, but what if they're completely wrong? Or worse, what if the optimists are leading you astray? We're cutting through the noise to expose the brutal truth and the surprising opportunities shaping Beyond Meat's future in 2026. You won't believe what our research uncovered. 1. The plant based roller coaster. Beyond Meat's current reality. Beyond Meat's stock has been on a wild ride since its 2021 peak near $200 per share, now trading a fraction of that value. The company's market cap has eroded dramatically, reflecting investor doubts about growth and profitability. Inflation has hit discretionary spending, causing consumers to prioritize cost over sustainability, leading to a pullback in plant based purchases. Despite these challenges, Beyond Meat maintains visibility through major partnerships with McDonald's, McPlant, and PepsiCo, though both collaborations have yet to fully translate into lasting revenue growth. The key question: has Beyond Meat bottomed out, or is this just a pause before deeper structural decline? 2. The bull case: why Beyond Meat could bounce back. Product innovation. Beyond Meat continues to invest heavily in R&D, targeting improved taste, texture, and nutrition, the holy trinity that could reignite mainstream appeal. A breakthrough in taste parity with real meat could reshape sentiment overnight. Global expansion. Emerging markets in Asia and Europe, where health and environmental concerns are intensifying, offer untapped potential. Government initiatives supporting sustainability could create fertile ground for adoption. Tailwinds from megatrends. Climate change awareness, health consciousness, and generational dietary shifts still support the plant based narrative long term. Even if the hype has cooled, the structural demand for protein alternatives is far from gone. Short squeeze potential. With short interest above 60%, any positive catalyst, such as new retail expansion like Walmart or improved earnings, could trigger a violent rally as shorts scramble to cover. 3. The bear case, threats to Beyond Meat's longevity. Competition everywhere. The plant based market is saturated, from Impossible Foods to private label supermarket brands, all fighting for limited shelf space and consumer attention. Profitability crisis. Beyond Meat continues to burn cash at an unsustainable rate. Supply chain volatility and rising pea protein costs have eroded margins. Brand fatigue. Once viewed as a disruptor, Beyond Meat now faces an identity crisis. Many consumers view its products as overly processed or overpriced, a perception that's difficult to reverse. Investor fatigue. Years of unfulfilled promises have created skepticism, with analysts downgrading the stock and institutions trimming exposure. 4. Diving deeper. Financials and key metrics. Earnings snapshot. Revenue growth has stagnated, with recent quarterly results showing year over year declines and persistent operating losses. Gross margins still hovering in negative territory, though recent cost cutting efforts show early signs of improvement. Cash burn and liquidity. The company's balance sheet indicates a limited runway, roughly 12 to 18 months of operational cash without new financing. Analyst targets. Wall Street remains divided. Some predict a rebound toward $10 to $15 if fundamentals stabilize, or others warn of potential dilution or restructuring if cash depletion continues. Beyond 2025, what needs to happen for survival? Profitability or bust. Beyond Meat must demonstrate it can operate profitably without constant dilution or debt issuance. Product diversification. Moving beyond burgers into chicken, seafood, and ready to eat meals could unlock new revenue streams and reduce dependence on one category. Strategic partnerships. Deepening retail and fast food collaborations, or even exploring private label manufacturing, could secure recurring income. Brand reinvention. A renewed marketing push emphasizing taste, value, and health, not just sustainability, could reconnect the brand with consumers who've drifted away. Operational efficiency. Continued cost optimization, streamlined production, and localized sourcing could improve margins and build resilience. Closing thought. Beyond Meat's survival in 2026 might not come down to whether plant based eating wins or loses, but whether it can evolve fast enough to stay relevant in a brutally competitive industry. Bulls see a comeback story in motion, bears see a cautionary tale. Which side will be right?
Okay, so based on what we have here, I believe these are short orders. These are many of them will be orders to short the stock if it bounces to these levels. It has to be that. It has to be that, or maybe yeah, or just it could just also be profit taking orders. Yeah, it could just be that as well too. You know. So that's what's going. That's the bear. That's the bull bear case. Have a look and thank you very much for watching this video.